But their head trader just came out and said their next stop is 6,600 on gold. But maybe the biggest one of them all is Jeffrey Gundlach, the bond king, the man who made his mark on selling bonds. Gold's going to go higher than anyone ever thinks possible. Jim Sinclair, God rest his soul, always said this. It'll go to a level no one can imagine, and it will never come back down because it will be pegged to the monetary system. Judy Shelton is telling you that, and the BRICS are telling you that. They're going to use gold to back their settlement system. July 4th, 2026 is a very, very big day for President Trump. It is the 250th anniversary of the United States, and he is going to reconnect gold to the Treasury market, to the back end of the bond market, the long end.
In a powerful reflection on the global financial shift, precious metals expert Andy Schectman discusses how gold's role in the world economy is about to change forever. With major investors and institutions calling for unprecedented highs, some even projecting $6,600 gold, the momentum toward a gold-backed financial system seems to be accelerating. For decades, gold was dismissed as an outdated relic, but that narrative is quickly fading. Legendary market voices once said gold would rise to a level no one can imagine and never come back down. And that prediction now feels closer than ever. The growing alignment between BRICS nations and key policymakers signals that gold could once again become the foundation of global settlement systems. Schectman highlights how central banks are accumulating record amounts of the metal, preparing for a monetary realignment that could dethrone the US dollar's supremacy. He suggests that by July 4th, 2026, the United States' 250th anniversary, we may see a historic reconnection between gold and the U.S. Treasury and bond markets, ushering in a new era of sound money. If this vision materializes, the world may finally witness gold reestablish its rightful place at the center of global finance. Don't forget to like, share, and subscribe for more insights on the coming monetary revolution.
They are going to let it go much, 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 much higher and then revalue it. Revalue it, even if they just market to market at that point. Right now, it's valued at $42.22 an ounce. James Rickards is publicly saying $24,000 an ounce. Mike Maloney, $10,000 an ounce. It's as simple as them revaluing gold, telling that the president tells the Treasury Secretary to revalue gold, who tells the Federal Reserve. They're issued gold certificates. The Treasury issues the Fed gold certificates, who then every $4,000 increase in the price of gold, the Treasury general account will get $1 trillion free and clear. So if they moved it to 24,000, hypothetically, not only would it benefit every central bank on the planet who's been buying it, but in essence, it would allow the Federal Reserve to receive those gold certificates for which, in theory, at least it says so in all the documentation, that they hold the gold, but it's not theirs. They're entitled to the fiat value of the gold. The gold belongs to the American people. They push a button, create $6 trillion, and give it to the Treasury, which devalues the dollar massively. Devalues the dollar massively. The higher the price of gold goes, it's not even the gold price, it's the devaluation of the dollar. That's what they want, the debasement. They're debasing the value of the dollar by letting gold and Bitcoin go higher. They already own over $8 billion in gold held in Swiss vaults. They were just at the Beaver Creek Summit, which is with all the miners, right? They are interested in buying gold and more short-term treasuries in Bitcoin with all of the proceeds that everything is moving on all throughout the world will be backed by this stable coin, pushes rates down synthetically, and with the profit, they buy gold, which pushes gold up, which does what to the dollar? Deflates the dollar, depresses the dollar, right? Pushing the dollar down, exactly what you're talking about. Same thing with Bitcoin. How do you pay off your debt? Let Bitcoin go to the moon because they continue. Look at how much gold Tether just bought the other day, billions worth, billions. They pushed Bitcoin up, and I'm not even a Bitcoin guy, but they're going to try and pay off the debt with it. The Russian finance minister is right. They'll let Bitcoin go up and they'll start to pay off the national debt. But by letting gold go higher and higher and higher and higher and having a mechanism that continues to buy it, plus all the gold coming in, billions and billions and billions, makes the gold stash go higher, sure. But then it also devalues the dollar. Now let's put it all together. How do you bring back manufacturing? I know you peg gold to the back end of the bond market like Judy Shelton is going to happen next July 4th. You bring it back at zero upfront borrowing costs. How do you sell your product to the world? You give up on the reserve standard and you massively devalue the dollar by letting gold and Bitcoin go to the moon. And that's exactly how you do it. Now, in essence, Trump gets up on stage and says, we screwed up a good thing. We used to be the world reserve currency that kept the prices of things we buy cheap, that kept our asset prices high and interest rates low. However, things have to change or our children have no future. Now, the only side effect I could see of all of this is universal basic income for a couple of years, because if you do not own assets in this environment where they have every intention of destroying the value of the dollar to reshore manufacturing, and someday he would say, we have a future. We can grow ourselves out of this problem. We can be the engine of growth again, of manufacturing, of ingenuity. Because if you're not working in Wall Street or in Hollywood making movies or in California with IT, where are you? What is the future of your industry? We must bring back manufacturing. There's nobility and honesty in that. But the only way to do it is to give up on being the reserve standard. Let every other country trade their own currencies and let gold be the arbiter of value. Honest to God, in my heart, I believe that is what is happening right now. So this volatility we saw in gold, which is right back to where it was, means nothing. Inflation, I believe, is going to go much, much, much higher. They have no choice through the debasement of the currency. That is a byproduct of all of this. And in terms of where that big money is going to go, they ain't going to go in treasuries. They're going to buy things like gold, which further devalues the dollar. They're going to buy assets. They will not keep their money in things like short-term treasuries when rates are falling and inflation is rising. They won't. And so I think it's even a bigger bullish case. But I do think this, that if you don't own assets, you're in trouble. And look at it, again, dollar's down 11%. Short-term treasuries, 3/4 through the year this year are up 3%. And gold's up 55. Silver's up like 70, 65. So it's an accelerating trend. And look, you don't need to be wealthy to start to de-dollarize and or start to own assets, even if it meant buying an ounce or two of silver every time you get paid. Whatever it is, the best thing you can do, in my opinion, is to own assets and mitigate your exposure to money within the banking system, which is acting more like a melting ice cube than it is a store of value. Even President Trump said, yeah, a strong dollar is great, but it's bad for manufacturing. No one wants to buy our stuff or come and do tourism here if the dollar is really strong. And so they're giving you little crumbs, little hints. So we look at all of the gold that's come into this country since November, billions and billions and billions and billions and billions and billions and billions every single week and month into COMEX. And no one can tell you who the hell's buying it. Who's got that kind of bread? A lot of it is stuck in the COMEX. They're leaving it in the COMEX system, because at this point, that money still trusts it. And a lot of it's leaving the COMEX. Where's it going? Who's buying it? Is it the Western banks covering their short positions? Maybe. Is that gold then going to the Treasury Department under the guise of the Exchange Stabilization Fund that the Secretary of the Treasury runs, who just happens to be a self-proclaimed gold bug, who said he wants to preside over a new monetary system, a new Bretton Woods, who said that he wants to remonetize the asset side of the U.S. government balance sheet. Well, what the hell does the U.S. government balance sheet consist of? The largest asset is student debt. The second largest asset is military. They ain't getting remonetized. You could remonetize asset number 3, I guess, which is national parks and land, but why not revalue gold, which is at 42.22 on the balance sheet? Gold is not replacing the dollar. It is replacing what stands behind the dollar, the treasury market or trust. All of these nations want to trade over a bridge network with their own local currencies, settle imbalances in gold. Look at the Shanghai Gold Exchange. They're building multi-jurisdictional vaults all around the Belt Road Initiative. They just finished one in Hong Kong. They're building one in Saudi Arabia right now. Saudi Arabia, who was a full participant in mBridge, the technology that allows banks to trade cross-border free from SWIFT intervention. And then they're going to go all throughout the Belt Road, settling imbalances in gold, not in one jurisdiction, kind of like Venezuela asking the Bank of England, can we have our gold back? No. So now it's going to be all over the place. All right. So back to what's going on here. We bring back all this gold. We are the largest importer of gold in the world since November. We've been a net exporter forever. All this gold's coming in. No one's asking who the hell's doing it. Who's buying billions and billions and billions and billions worth of gold and silver? Who? No one's talking about it. I really do believe that the Exchange Stabilization Fund is involved in this and taking possession of it on behalf of the Treasury Department, not having to get congressional approval because it's for national security. But none of that even really is relevant. So if Judy is right and they peg it to the back end of the Treasury, first and foremost, that would allow you, because there's no upfront borrowing costs. All of the bonds, with the exception of the 50, would have zero interest, maybe the 30. They would be redeemable in gold. The more stupid you are with monetary and fiscal policy, the higher the price of gold goes. So the people will buy our bonds. They can trade off of them. Judy said, and there'll be stable coins issued off of those too. So in any case, they will, in theory, buy the bonds, which are redeemable in gold, which are very liquid throughout the system, and then they will be able to stand for redemption of gold in the end.
In a revealing discussion, Andy Schectman outlines a scenario that could reshape the global financial order: a full-scale revaluation of gold and the deliberate debasement of the US dollar. He explains that while gold is still officially valued at just $42.22 an ounce, leading analysts predict that governments could reprice it dramatically higher, anywhere from $10,000 to $24,000 per ounce, as part of a plan to stabilize debt and restructure the monetary system. Such a move would allow the U.S. Treasury to issue gold certificates to the Federal Reserve, instantly adding trillions in balance sheet value while simultaneously devaluing the dollar. This would weaken the currency, stimulate exports, and help revive American manufacturing, all while pushing global investors toward real assets like gold, silver, and even Bitcoin. He believes this strategy is already unfolding quietly through massive gold inflows, global de-dollarization, and the creation of multi-jurisdictional gold settlement networks across Asia and the Middle East. The coming years, he argues, could mark the dawn of a new Bretton Woods moment, one that redefines trust, value, and money itself. Let's get into the interview.
Shirazhou, Hunan province, so it accounts for 1/4 of China's silver production. It's known as the silver capital of China. They're basically all out of stock. India, as you mentioned, their largest precious metals refinery has ran out of silver stock for the first time in history. Again, this is massive demand for physical. You have at the same time London with the lowest amount of silver, the float that they've had in the history of the exchange, of 140-year-old exchange. They have less than 140 million ounces, yet they're trading 600 million ounces a day off that stash. What could possibly go wrong? There's between 1 and 2 billion ounces of contracts that could stand for delivery with only 140 million ounces available. At the same time right now, you have the U.S. government who just reclassified silver a critical mineral. At the same time, you have 19% lease rates in London, the highest it's ever been to my knowledge. So people who need to borrow silver to get whole, to cover a short position, they're paying 19% lease rates. You got massive drawdowns in London. You have massive deliveries into New York. You have places like the London Metals Exchange with their lowest float ever. Silver becoming impossible to find in China and in India. You have China flying around the world as the second largest producer in the world of silver, buying up all the doré bars from the miners directly. Those are crudely refined bars that before they get sent to the refineries, and the concentrate, which is a sludge byproduct, shipping it back to China and refining it themselves. You have backwardation, which is something that is very unusual and has been through for 3 straight weeks now. You have lease rates going to the moon. You have SLV borrow rates going to the moon, and no shares available. I don't know, man. People say he's talking his book. I'm telling you, when the U.S. government reclassified silver as a critical mineral, they just put a floor under it and told you it's important. And all the central banks that are now buying it, Saudi Arabia just bought a huge stash. India has bought 6 or 7 or 800 million ounces over the last half decade. No one knows the exact amount, but massive amounts. They can't even find it. You have Russia adding it to their strategic stockpile. You have it disappearing. Ask your buddy Keith Neumeyer, who I know is a friend of the show. He'll tell you. He's told me personally a million times, and I hear him saying it publicly from time to time. The real mining ratio is 7-to-1 right now, not the 80-to-1 price ratio crap that we're looking at. And it was 16-to-1 for 5,000 years. In every single metric, silver is the buying opportunity of a generation, period. And I don't care what anyone says. I'm not talking my book. When you manipulate a market for as long as the West has based upon illusionary paper product, that works until people say, hey, you know what? Give me the real shit.
In a powerful breakdown, Andy Schectman highlights an unfolding crisis in the global silver market. A shortage unlike anything seen before. From China's Hunan province, known as the silver capital of the country, to India's largest refinery running out of stock for the first time in history, the world's physical silver supply is vanishing. London's 140-year-old exchange now holds less than 40 million ounces of available silver, yet trades up to 600 million ounces a day in paper contracts. With global demand exploding and lease rates soaring past 19%, cracks are forming in a system built on synthetic promises instead of real metal. Meanwhile, nations like Saudi Arabia, India, and Russia are adding silver to their strategic reserves, and China is quietly buying raw silver directly from miners worldwide. With the U.S. government reclassifying silver as a critical mineral, this metal is no longer just an investment. It's becoming a matter of national security. Schectman believes silver's real-world importance has been underestimated for decades. The manipulation can't last forever. When the market demands delivery, everything changes. Thanks for watching. Don't forget to like, share, and subscribe for more insights on gold, silver, and the global economy.